want to welcome you back, our dear viewers of Hope Channel Uganda. It's me, Joan Singora, once again the host of Money Talk Show with my guest here, Mr. TAYEBWA, the Senior Financial Advisor in Insurance. So we are continuously unpacking insurance, getting to understand what is it all about, so that someone outside there who had different questions, who had doubts that should I go or not to go, should have a clear mindset about insurance, and then you go for it. So Mr. Bob, what does the term risk pooling mean?
Okay, thank you very much, Joanne, once again. Risk pooling is a very, very pertinent question, or a very good thing to think about as far as insurance is concerned. We look at policyholders or different insurers pooling money together. The way it is pooling, we meaning that money is going to be pooled together in one source, so that the person who is unfortunate and has undergone the risks that we're talking about is compensated. So money comes together from different insurers. You pull it together as an insurance company. You find that this is the money they're going to use to compensate someone who has got an uncertainty. I talked earlier of 100 million. You might ask, I mean, I've paid only 1 million shillings. And Bob is saying that insurance is going to pay 100 million to my loved ones in case of any risk to me. Yeah. You might ask, where does that money come from? Now, risk, exactly. Now, this exactly is answering that question. Okay. Remember, maybe 100 people are going to pull that 1 million shillings, or 1,000 people. 1 million is paid by Joanne, another one by Bob, another one by Edson, another one by Mary. So out of just 1,000 people, if they are paying 1 million shillings, how much is that? It's quite good money. So you find that when someone out of the people who have pulled has suffered an uncertainty, maybe someone has passed on. Now, because I've already collected maybe 1 billion from different insurers, what is 100 million? It's just, drop in the ocean. I'm able to get it from the pool and then compensate the other one who has passed on. Because that is purely the structure in which life insurance works, or insurance in general. The same thing to the cars. We insure millions of cars every year, but how many get accidents? Maybe 10%. What about the 90? They didn't get any, maybe accidents. So the people who paid for that 90% of people who paid and never got the challenge or loss are going to compensate the other ones who got the challenge or got an accident. And that is purely the principle in which insurance operates. Pooling money so that those ones who are unfortunate are compensated out of that pool. Thank you very much.
Basically, we'll be looking at people coming together, bringing finances to reach out to other people that are challenged, but while making profits as well for these people that haven't gotten challenges.
Yes, because remember, this money, when it's given to us, we do not actually sit on it. So you pooled money, but what do insurance companies do? We invest this money so that, of course, we're able to make a return. And in case someone has a claim, we're able to pay them and still retain some profits for the company to be able to grow, because we have expenses to pay. We have rent, we have agents to pay, like me, we have other expenses. So all those point towards us having to manage this money correctly in a pool, invest it so that we can be able to compensate, but still have some money remain for the operations of the insurance company.
Okay.
Thank you.
That's really beautiful.
Yes.
So why is insurance really critical for business continuity? Okay. Someone who maybe has a business and be like, I think I should insure my business maybe from theft, maybe from fire outbreak. So why is it really critical?
Yes. Okay, so number one, I would say for any business to, of course, to be able to continue, there are many critical factors that you need to look out for. What are your costs? What are your, of course, earnings for the business? Now, you find that what happens if there's an uncertainty? Say there's a manufacturing company, and it has suffered a fire risk. This kind of loss is going to set them way behind in their numbers, because it's going to wipe out a lot of money that needs a lot of assets that probably need money to replace. Imagine it's a company and it's worth 1 billion shillings and it's manufacturing, and you can name any kind of maybe item. In case of a risk outbreak, this company and the asset that they had that was being operated in is going to probably be lost. Say it was 1 billion shillings. Now, for this company to proceed and be able to work and continue with business, you have to replace what has been lost. Now, imagine a company having to first look for the 1 billion to be able to set up this factory again and proceed. It is really going to eat so much into their finances. But now, insurance comes in and says, you know what, if you had insured against fire, against that risk, that 1 billion is going to be borne by an insurance company like ICEA. So you find that at least you are going to have not having a lot of burden to be able to first replace what was lost and then continue with business. Already that 1 billion is there, or that compensation is there for an insurance company, and the only thing you're going to probably work on or worry about is how do I now proceed with operations. So that really gives a company a very, very good peace of mind to know that in case of any risk that has happened to me, at least I have a cushion or I have a compensation coming, and I'm able to continue my operations in the right possible way. So businesses, you cannot run away from insurance because you want to grow your business, to see your business grow from step to step. You want in the next 5 or 10 years your company to be able to get better. So how do you do that without insuring so that you are able to at least get that compensation in case of an uncertainty? Insurance becomes very key for any insurance, any business out there. Thank you, Joanne.
Okay. So, but I think also that one gives the business people a relief, knowing that their businesses are really insured.
Yes.
Because working without you establish a business, you not knowing that any calamity can follow your business, then how are you going to bounce back?
Absolutely.
So I think it's very important for those people to really appreciate this, and then they get insured or they insure their businesses.
Absolutely.
So beyond protection, does insurance support financial or long-term financial planning?
Okay.
Beyond protection, does it also encourage saving? Does it also encourage investment? Does it encourage other financial?
Yes.
Yeah.
Thank you very much for that. And life insurance itself, even by its discussion, its definition, is a long-term financial product that you're going to be able to take up for your long-term financial goals. And this is very, very critical because you see, when you're insuring your life, you're not only insuring your life against all those uncertainties, but you're also saving for your long-term goals. Because as I told you, even when you take up a life insurance policy, even when, for example, the uncertainty hasn't come, you still have your money available because you saved it. It is your saving. You're giving us money monthly. So after 10 years, as long as you're alive and all is well, you find that you can walk into an insurance company and get your money plus the interest or the profit. So how does it afford to maybe support long-term planning? You are able to still cover some long-term goals. Remember, we have very many long-term goals that we are wanting to accumulate for. This 100, this 200,000, in the next 10 years will accumulate to probably 20 or 30 or even 100 million. And then we have very many goals that we have set. We have education for our children. We need to be able to plan for that today, not 10 years from today. As a matter of fact, if you have a child in P1, you need now to start thinking, which secondary school are they going to? How much money do I need? What about secondary school? So the university, how much money would I need? So by doing this life insurance policy, you are also catering for those long-term goals. Because in the next 10 years, when my kid is in maybe secondary school, I have my 30 million maturing, school fees is no longer something to worry about. I'm able to do that.
True.
But remember, education is not the only goal that we are looking at. We are looking at other goals, for example, retirement. Some people need to save for retirement. I mean, some people in the next 5, 10, or even 20, 15 years are retiring. Beyond what maybe you have in NSSF, can you put up another scheme? Because how much money would really be enough for retirement? You find it's a lot.
Yeah, true.
So if you put your own other separate scheme and say in the next 10 years, I want to do a policy of 100 or 200 or $1 million, and you're walking away with another 140 million over and above what your company has saved for you, then you're going to approach your retirement with confidence. That is another goal. What about home ownership? We have people who say, I also want to own a home.
Yeah,
that's another goal.
Yeah.
Having saved this money over a period of time, it matures, you're able to, purchase the land, maybe put up your dream home or put up something, put up, buy a farm and start livestock. So it really opens up very, very many and multiple possibilities for you to have a life insurance policy. And I wouldn't want viewers there to confuse and say it is only about uncertainty. Bob was talking of death, of disability and illness. It is also opening up another possibility of saving for your long-term goals out there. You could want to start a business, in the next 5 to 10 years. You're just like, let me put aside money. I have my 200 million. I start this project. So all these are giving us avenues to be able to save and collect money for long term. And you do not say, I have only one policy and it is enough. Because I can tell you, I meet many clients who tell me, I have a life insurance policy, I have one, let me first wait for it to mature. Yeah. But then you ask this client, how much money are you going to get after the period? He's telling you 10 million, 20. But are your goals really within only 20 million? You find that it is a huge gap that we need to cover. So starting another policy, if at all the finances allow, and another policy next year, another policy the other year, has never been a bad financial choice to make, as long as you have the cash flow to support those goals. But in a nutshell, life insurance is very good. It helps you to build wealth over a longer period of time and even build generational wealth. Because even if anything happened and you pass on, this 200 million is going to be paid to your loved ones. At least you've left behind something to start from for themselves, for the future that the children have to be able to also go through, the education, and of course for the spouse that probably you've left behind. So life insurance, I cannot really over-explain the advantages. It is very, very critical for someone. As long as you have life, because you see it's life insurance. Yeah. So if you have life out there, you need to ask yourself, have I insured this life? That anything happening today, I have a compensation or a compensation for your loved ones. So wealth is very important. We are building it, but the other part of uncertainty, very critical also to think about. Thank you very much, and I hope I've been able to answer that.
Yes, you've been able to answer that. Also, another question pops up in my mind. So, in case someone dies, God forbid,
yes,
and he had applied for the 10-year policy.
Yes.
So, do you give this person the whole sum, as in for 10, or you just give this person the money he had paid maybe for 3 years or 4 years, or 5 or 7?
Okay, so life insurance, you find that even the policy that we give you, we shall specifically mention the terms and conditions of that. That if someone passes on, before even they reach the policy term, we are able to compensate up to this amount. Remember, I had told you about the coverage. Yeah. So that's the maximum that we're able to pay out in case it happens. And for life insurance, I can tell you as light follows day, that if you did a 10-year policy and God forbid a client passes on after 1 year, we are still going to give up to what we call the maximum sum assured. Now, the sum assured, as I was telling you, is of course going to depend on your age. It's going to depend on the amount of money that you're paying, and of course the policy term that probably you're taking. If you take a life policy of 20 years, the sum assured might not be the same as someone who takes up a 10-year. But I can tell you all that is in the policy document that we give you. And just to give you an example for just people to get clarity over that, if you are there and you want to do a life insurance policy for 300,000 for let's say 10 years, and you are within the age of 25 to 35, you are going to be able to pay just 1%. The kind of sum assured they're going to pay you is 30 million shillings. So 300 is just like how much? 1% of the 30 million shillings, which is something very small. So you're paying 300,000 per month, but in case, God forbid, you pass on before the 10 years, your family is getting how much? 30 million shillings. If you wanted 100 million, that's why I was telling you, you're going to pay about 100. So when you're entering, we give you all those details, depending on the coverage you want, and of course how much you can be able to pay. Yeah, so it is very legit. Some people, when we start talking of these figures, they think maybe we are just, just trying to sugarcoat, but this is our business that we have done over a period of time, not only ICEA, but most insurance companies, and we have been able to do it effectively, and we're able to be able to pay. Because this is the only investment that pays when you're alive, pays when you're dead, and also pays in case of maybe a critical illness along the way, when it comes along the way in your own life. So that is the investment that any person would really want to have. I mean, you can look of any investment out there that you want to compare with. Does it pay you? Does it pay your family in case you pass on? Does it pay you after the period that you really want to do, that you want to look at? Does it pay you in case you get maybe critically ill or you're disabled? So all these are things to consider, and that is why life insurance is very unique compared to other maybe financial assets on the market. For everyone out there who has a life, for me I would say, have a life insurance policy. And as they say these days, have an insurance policy and thank me later. Thank you.
Okay, that is something really nice. So how can an individual balance business and hustle for himself to make it much affordable
Okay.
I have a business and I have also insured myself.
Yes.
How can I make it so simpler for me also be part of it as well?
To be part of
The insurance. That I have a business, it is insured.
Yes.
I also have my children, they're insured.
Yes.
I have myself, I'm insured.
Yes. Okay. So that's where now we look at different goals that you have in life, because you find that everyone has you are looked at in a multiple way. Yes, it's you, but you have a business, you have children, you have property, and all these things need to be looked at when you're planning. So when you come to us, by the way, I say we don't only look at you as an individual. We shall ask you questions. Do you have dependents, for example? Do you have a business to insure? Do you have assets to insure? So that we give you all these avenues, and then you are covering all risk. Because we could insure your life, but then you have another asset. It's a car, or it's maybe a building, it catches fire. Yes, for you, you are okay, you're insured, your risks are really catered for, but then we have not really given you a comprehensive coverage for your assets. So in ICEA, we believe in comprehensive insurance for everything that is all around our client, and that's why we don't believe in one policy. When you come for yourself, we shall ask you, do you have an insurance for your children, for yourself, and then for your business? And of course, we look at your cash flows, because all these definitely need money. So affordability is also very important. Can you put money for each and every one of these? And that is where now insurance advisor like me comes in and sits with you, and we look at your finances. It's not really that we just take your word for it. We can sit down with you, you tell us your finances, this is my business turnover, this is my maybe salary, this is exactly what my income is, and then we advise, can you afford this? And then we advise you. However much the benefits are good, but we also go ahead to advise on the right appropriate policies to take, so that you do not also expose yourself. And of course, you do not get strained by finances. As I can tell you, some people start policies after 2-3 months, then of course they are not paying, which is another totally different topic altogether that we wouldn't want to go into. Because the things are good, you've liked it, but can your finances really support this policy for the next 10 years? And that's why we ask questions sometimes to do with what is your maybe net income. We need to know that, because if you're earning, they say from hand to mouth, you only get money when you do your jig, 100K, 200K. How are you going to really sustain a policy for the 10 years? It's going to be quite impossible. So affordability, very, very, very important. Look at before you join a policy. And of course, looking at your goals and what you can be able to sacrifice today. But in a nutshell, sacrificing today is better than waking up after 10 years and then you say, I wish I had started 10 years ago. Thank you.
Wow. So if someone is watching you right now,
yes,
and maybe he or she missed the first episode,
yes,
and also he came in late when the show had already begun,
yes,
what is that one thing you wish to tell them?
Okay. Thank you so much. I would say for sure insurance is something that you cannot postpone. You need to do it as soon as maybe even yesterday. Because honestly, no one knows what the future holds, as I was telling you. No one knows whether next month or next week or next year, we do not know what exactly happened. I mean, to give you an example, COVID, no one knew COVID will come at any point in time. No one knew even about it. But all of a sudden, it was there. People lost their jobs. People were retrenched. Now, people who did not have something really as a buffer for that, those are the people definitely who would really get a very big hit on that. And many other uncertainties that can easily happen. So what I could tell someone out there, please, if at all you are able to have two things. One, do you have the discipline? Do you have consistency in your life? And maybe the third one, do you have a cash flow? Please start your insurance policy today. Because we believe that the you of today has no option but to plan for a better you tomorrow. The Bob of today has to definitely plan with a Bob of probably the next 10 years. Because if I wake up after 10 years and then I say I want to start now saving for maybe Bob in his 50s or 60s, and yet I've already reached maybe at the boundary of that, it's going to be a little bit hard to accumulate that money. So starting today is always a better option than starting tomorrow. Thank you very much, Joanne.
Well, I believe that an ounce of prevention is worth a pound of cure. It's better you start now. It's better you prepare yourself now than you realize that it is too late and you wish you had done it earlier. So we want to appreciate you, want to thank you so very much for keeping with us here on Money Talk Show. And in especial, I want to thank Mr. Bob for such a beautiful insight. Okay. I believe that people outside there have been blessed through your knowledge. And I know that someone out there is planning to say, I have to call Mr. Bob and say, Mr. Bob, I need a policy. So if someone wants to reach you out, what do they do?
Thank you. So I will give 2 options. Number 1, you can reach out to me because we believe, in ICEA, we believe we need to reach our clients even before they reach to us. Yeah. So you could be here and you're just like, you don't even have the time to move to our offices. Give me a call. And I'll be able to reach out to you straight in the comfort of your office or your home, and I'll be able to at least help you to onboard. My number, Joanne, and also the audience, is 0772 96 09 and 74. 0772 96 09 74. Do I mention also Airtel?
Yes, please.
Okay, Airtel is 0759 724 530. 0759 724 530. And if it's not me, of course, still you can reach out all our, I think some of you already know, and you already maybe interface with our agents out there. You can reach them out. In case you say, I really want to move and see where the offices are, I can tell you there are some clients who still want to get a feel and touch of where is this office before they sign up. We are located at Renzori House on the 2nd floor. I think all of you can be able to locate Renzori House. It's in the middle of town, so you can at least drive or walk there, go on the 2nd floor. You see clearly ICEA Lion, and then you'll be able to be helped on how you can be able to take up a policy. And of course, we have still other branches. Some out there might say, us in Mbarara, or us in Kabale, or us in Gulu. You find that we also have branches spread out. And we also have online assistance to people who are not maybe predominantly in the areas I've mentioned, and say we want to reach out. We can still be able to onboard you online. We have an online procedure where you can even onboard when you're out of this country and you're served very well. So that is it, Joanne, with that. But we are always open to be able to serve because we believe even our penetration is still low. So our work is cut out. We need to reach out to as many people as possible. Even as I close, I would say, even when you're out there and you've had this, do not please limit it to yourself. Please tell to a friend, tell to a neighbor, tell to a relative, and see that everyone is covered. Because you never tomorrow, if I told you there and maybe you're a brother and you have another siblings and anything has happened to them, in most cases you find that the cost still in one way comes to you. So what if all of us are insured? You find that we have at least financial security for all of us, the whole family, the whole village or the whole country. All of us would live a very comfortable and very, very wonderful life. Thank you very much, Joanne.
Thank you too. And at this particular moment, once again, our dear viewers want to thank you in a special way. And we pray that the Almighty God guides you in your life, in your businesses, to flourish so that you get money to buy these policies and protect your lives, your businesses, as well as your family and your health. So thank you very much for listening. Thank you for unpacking insurance with us. And you know that financial literacy has taken place, learning has taken place. While we're here, we try to learn and relearn once again, because learning never ends.
Yes.
God bless you and shalom.